Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, the Crypto Hipster, Jamil Hassan, where I bring you founders, entrepreneurs, executives, thought leaders, artists, musicians, you name it, all over the world in crypto and blockchain. And today and the summer season, I am bringing to you a new compilation episode. Last year, from seasons 1, 2, and 3, I brought you the Crypto Hipsters Chronicles. And now, from season 4 and 5, without further ado, I bring you the Crypto Hipsters Mysticals. And what that is, what it was last year, and what it is this year, it's a compilation. It's a compilation of 3 or 4 podcasts together as like a montage. And on a certain topic or area of interest in crypto and blockchain, pulling from my podcasts. And now, as we're heading into the summer of 2023, I bring to you the Crypto Hipsters Mysticals. And there's going to be 22 or 23 or 24 around their episodes. And I look forward to you looking forward to it. So thank you very much for tuning in. Thank you for enjoying my podcasts. And this is going to be a summer treat for everybody. So please sit back, enjoy, and let me know your thoughts. This is Crypto Hipsters Mysticals, episode 22, the Mysticals finale. Episode 22 is entitled, Our Global, Social, Financial, and Economic Future is Decentralized. This Crypto Hipsters Mysticals episode is a compilation of 5 Crypto Hipster podcasts from seasons 4 and 5. The following guests are clips from their original podcasts. 4 or 5 minute clips include, starting first, is Sean Lee, who is the co-founder and executive director at Odsy Foundation. Tommy Johnson is the founder of PsyFi DAO. Joshua Kagan is the co-founder and CEO of Bonfire. Then Akash Mahendra is the director of Haven One Foundation. Finally, Pedro Isaac Lopez is the Chief Growth Officer at THORWallet Dece. This has been a wonderful compilation and season of Crypto Hipsters Mysticals. I hope you enjoy this final episode. Thank you for tuning in.
I want to go back to something you said earlier, talked about bridges, right? And you and I both come from the database world, right? What do you see as the role of these Oracle networks in having a role in helping to create trust in the industry and bridge those gaps?
Maybe I'll answer it this way, right? If we look at how the world works, obviously here in Hong Kong, we have the Hong Kong dollar, and you have the US dollar, you have Japanese yen, the Canadian dollar, and so on and so forth. Every single country or economy has its own native currency. These currency require some standardized ways to value where they are against each other. Otherwise, you can always, you can say your currency is valued at whatever, but who's actually going to go buy into that? There has to be some industry recognized, market driven way to value things in a hopefully very transparent manner. Now, the reason I'm saying that is every chain has its native token and many other tokens minted on top of it. You do need services like oracles to be able to value where they are, and again bring some consistency around how each one of these are being valued, and especially from a perspective of transfer of value. Obviously that becomes very, very critical. So I think Oracle services will continue to be there. Oracle services probably needs a little bit more consolidation, to be honest. because you do see a lot of discrepancies being offered from one ecosystem to another. So some level of standardization is very much needed. But on the bridging side, again, just kind of going back to your roots and my roots, right? Like I look at bridges and I'm like, well, 20 years ago we called that EDI, right? Electronic data interchange, right? You have A system, B system, 3 system, they're all proprietaries, and you need to exchange data from one another. You need to build these EDI, right? And then very quickly they become completely unmanageable because there's different versions of the same system that also need different version of the EDI chain, the interchange that you're building. Sorry, I don't want to make myself sound very old, but that's the world I come from, right? And then you eventually move to a world where EDI becomes more like a messaging bus. So there's some standardization. Everybody just plug into the same message bus, and now you're able to communicate and pass along the data, together. And then move forward, a little bit more. You go from messaging bus, which still have some, dare I say, the centralization aspect, right? Because there's still a messaging bus, right? You need that to basically hold everything. So we then start to evolve into this stateful and stateless way of communicating and passing messages. So on and on and on and on. So I think in the electronic information exchange aspect, we've already gone through 20 to 30 years of evolution, and we've gotten it very, very good now. Right, everything from your standardized email to communication to messaging apps to system level communications and data bids and transfer and all of that. In blockchain, we haven't really gone through that yet, right? We're still in the infancy of passing both messages or communication and value from one chain to another, one ecosystem to another. And I think Bridges is like version 1.0 in regards to our way of doing that today. The 1.0 is needed before you can get to 2.0 and 3.0 and 4.0. So I'm not here to say bridges are bad. I'm just saying this is just the beginning phases of how some of these things are being done. We need to also make sure that the way how bridges are built have some standardized notion to it, some consistency. We also need to make sure that these bridges, when they're rolled out, they're not just rolled out for the sake of getting rolled out. They're also getting rolled out with some security audits and some very specific, cyber kind of notion in mind, so that they don't fail as much as they do today. So it is growing pain for a new industry and a new paradigm on doing things. It is not easy, but it's a necessary step. So in time, once we have more standardization around how price discoveries are being done, and how Oracle services from different ecosystems need to really talk to each other, and then how bridging from one application to another or one chain to another are starting to be more standardized, then I think we're going to get to that point where people feel more comfortable exchanging value from one to another. Like we're starting to see some innovation in that space, but we're not really there yet. And what Odyssey is solving isn't that entire picture, right? We don't claim to do that at all. But at least we want to solve that problem where even from an access perspective, it's very fragmented. So we can start to bring that access control together, make it very standardized, make it very templated from that perspective, then at least that's one aspect of doing it. And then there needs to be other technology and innovation and capabilities from other founders and other projects, so we can really bring all of these together in a, as we come out of this cycle.
There are Web3 alternatives, like you said, there's options, and there's other things too, right? So what are some of those other things, and how can we onboard the next 100 million people, to participate in Web3 and DeFi? How do we do that? What are your thoughts on that?
I think a lot of it comes down to the risk adjusted yield, right? And I think if we're focusing on I like DeFi, but I'm also a gamer, so I like GameFi. But I'm going to focus on like the DeFi perspective of it right now. And the biggest thing with like crypto is it's at a global scale. I think we've seen a lot of people exit DeFi with interest rates going higher and whatnot. But I think as we build more sustainable yield or sustainable products based on real world tokenization of real world assets and things like that, and bringing accessibility to those kinds of markets or bringing additional liquidity to those kinds of products, that is what will get a lot more people interested in. I think we're in this weird point where there's not a lot of clarity on what's a security, what's not. We're seeing a lot of law come down by, just by case basis rather than actual clarity. And I think once we get that clarity, it'll open up a lot more avenues for real estate backed yields. And, just like you see with NFTs, right? A property could be considered an NFT, but you could fractionalize that and have ownership if you register it as a security and distribute yield. I think a lot of that is just not technical challenges, given where we are with the technicals of blockchain and ecosystems, but really regulatory hurdles and regulatory challenges. So I think once we get clarity on that and growth on that front, there's a lot that will open up.
I wasn't going to ask you about GameFi, but do you? But you're in game. But gaming is a huge thing across the world in crypto. It's massive, and people don't. A lot of people don't play games. They don't realize that yet. So what should they know, and how do they earn, and how do they get involved?
The biggest thing is really about digital asset ownership, and then just like having the ability to plug in with DeFi and have free markets on those assets is what opens up a whole world of new possibilities. You imagine like you have this centralized Fortnite store where you're buying skins and whatnot, but you can now have this decentralized store where people are creating skins and swapping them and selling them and plugging into games, or maybe this centralized plus a decentralized where the game developer is controlling the skins and the game assets, but you could move them out of the game to go sell them on some order book or some auction house or something like that. And where you have like the World of Warcraft auction house, which is like separated by server to server, the blockchain can now be this global unification of those auction houses. And now you have liquidity, a single source of liquidity across all game servers. And you're not fragmenting that liquidity, and people can get access and assets in and out of one server or another, which I think is like very cool.
So you break down so one of the things that you do well is you break down traditional real estate investing barriers here in the US. But how about, over the years, a lot of foreigners have bought real estate in the US, right? How do you help those who want to invest here or who are outside the US, or those who are in the US who want to look and start like building, investments overseas? How do you break down those geographic barriers as well as the learning barriers?
When we launched our MVP, our minimum viable product at the end of last year, which consisted of an asset outside of Charlotte, and that we tokenized, and each token was $31. I have to say the most rewarding thing, or one of the most rewarding things as a founder and CEO of this project, was the number of people who spontaneously wrote on Twitter or on Discord, hey, I'm an economist in Argentina, or I'm a cab driver in Jaipur, India, and I now own real estate in the US of A, right? Oh, like I never thought I'd own real estate in the US. And you look at some of these countries. My wife is from Turkey, okay? We got married 12 years ago. When we got married, it was $1.5 lira to the dollar. 2 months ago, it was 18 lira to the dollar, okay? Today, it's 27 lira to the dollar, right? So if you had your money in lira, you've lost, I don't know what the math is off the top of my head, 95% of your purchasing power, right? But being able to park your money in a safe and trusted way outside the US in a totally legally compliant manner through platforms like Bonfire, I think is a game changer for the rest of the world. I really do. To your question about looking at it the other way around, how can Bonfire help projects outside the US? We're getting approached, not daily, but almost daily, about projects in Dubai, Nicaragua, literally like all over the world. We're very, very, very judicious in the projects we do. We do a lot of due diligence on the sponsor. We do background checks on them. We do, we walk the sites. We make sure that the business plan makes sense. We don't just look at the numbers that the sponsors give us. We independently stress test them, make sure that the assumptions are validated, because anyone can make a spreadsheet look good, right? But like, do the numbers really check out from an independent perspective? And we just haven't been able to get comfortable with some of these other jurisdictions and and frankly, we haven't spent the time and money to understand the intricacies of their securities laws and things of that nature. But a lot of the actors that have brought us deals, I just haven't had the professional rigor, and maybe they're used to getting money quicker from other people. I don't know, but they just haven't met our standards. So we're not going to ever put anything on the platform that we don't believe in. And one of the ways that we're very different than some of the other crowdfunding real estate sites out there, I think this is actually really important to know, and it plays into your question about international projects, is like all of our competitors, as far as I know, get paid by sponsors or operating, like if someone is raising money for a real estate project and they go to our competitor platforms, those competitors are getting a commission, a listing fee, and a success fee for successfully placing the money. We don't, because we don't want to have a conflict of interest. We don't want to have to feel like we have to put substandard projects on our platform, right? They have to be good enough that we'd want to invest ourselves into them, right? So someone from the Middle East who could have a huge project and say, oh, well, we'll give you a 5% commission to put it on the Bonfire platform. It's like, no, that's not our business model. Sorry. Like, we have to actually want to invest in it. And for us to want to invest in it, we have to feel very comfortable about the group who's putting it together, the entity structure, the local laws, the actual piece of real estate, the other types of real estate in that market, the demand drivers, what other supply is coming online. I mean, there's a lot that goes into putting a project on our platform. So we haven't found anything that's passed our muster yet internationally yet.
I got to talk about that because two of the biggest, actually you can even say three of the biggest, busts from 2022. And I mentioned Celsius and then FTX and maybe 3AC. These were CEOs, people had no criminal background. Like, they were entrepreneurs, they were successful people. They had no malicious background. Like, so they probably would have passed any KYC, right?
Yeah.
And still you had the fraud and maliciousness, right? That occurred. Why do you think that is? or and how can Haven One ensure your own compliance as well for users to ensure, like, is it greed, or is it just like something that happens, or is just making the ecosystem so big and you don't have the proper risk management? Like, what, how could you turn a great citizen into a criminal,
Oh. It is super bizarre. I think maybe Mashinsky was, committing clear fraud. He was trading and asking people to deposit funds in Celsius when they were clearly insolvent, which is goes against his own duties as a director and CEO of the company. That's, I think he was in a very dire situation, probably not thinking straight. I can't comment to a state of mind, but I think it just seemed very desperate as to what he was doing, trying to trade their own way out of trouble. So in terms of what Celsius had left over. Look, again, it's I think people lose themselves in crypto. Like you said, Jamal, it's a lot of greed, perhaps for a lot of arrogance, a lot of ego. These people, like a lot of the founders, go through. We talk about it internally a little bit, a bit of tongue in cheek, but you never want to be the main figure in crypto. You never want to be the guy who's like the limelight, because you always get taken down. Like Do Kwon was the main figure for a long time. He brought a lot of attention to himself, gets taken out. Same with Mashinsky, same with Avi, the guy who did I think it was a Mango Markets hack. He was talking a lot about like how he flash loaned, and he was kind of bragging about it a lot. He became the main figure in crypto for a while. So anyone who's got the the central figure syndrome and the main figure syndrome always gets taken down. So it's always good to keep a lower profile than most people. There's some good actors in the space, like such as Sam K from the Frax, and of course people like Kobe. They don't really put themselves in the in the limelight as much. As much as Do Kwons or the Mashinskis and whatnot. So yeah, it's just I think things aren't going to change anytime soon, because I'm sure the next run's going to bring very similar people over as well. But yeah, we can hope for the best though. So in terms of,
how do you even ensure your own compliance?
Yeah, so just a little bit of background. We've been running Yield Out, which is a regulated, compliant digital wealth management platform for a number of years. Internally, we have a strong compliance team. We're all on top of all new legislation, such as MiCA, DORA, and anything else comes up. We constantly monitor all activity with on our user base and for anti-money laundering, CTF stuff, compliance, everything else. So we're going to bring all of that to Haven One. We've registered the Haven One Foundation under the Swiss jurisdiction, and we're working with a number of entities in Switzerland to create a home for our Haven One DAO. So as you're aware, Switzerland has a very strong reputation for regulation, and it has a very flexible legal frameworks for blockchain projects now. So the Swiss city of Zug has developed into a world center of blockchain industry with a huge number of institutions and crypto services based in the region, and it provides us with a lot of opportunities to cooperate with them. To be frank, we could have chosen, we could have chosen a less stringent jurisdiction such as Cayman Islands or Bahamas or whatever, and essentially achieves the same outcomes for the foundation base for lesser costs and less regulatory oversight. But we made a very intentional decision to align ourselves with a reputable jurisdiction with a strong legal system, because we want to make sure that all of our users and all of our all the participants, all of our investors are kind of satisfied with our transparency. We want them to have confidence in what we're building and confidence in the team itself. So we've made a very intentional decision to register in Switzerland rather than one of the lesser legal jurisdictions. If you could say that.
And one of the things that if I take a month or two off, and I took a lot of the fall off, is I go from knowing a lot of what's going on in the area to not knowing much at all, because things move so fast. So I wanted to find out, from you, what is the current global state of DeFi and governance too, and then with the contagion that happened this past summer, where's the DeFi industry at right now, and what do you see going on, and what do you see as the future of it?
Yeah, so I have a bit of a contrarian take on this, because I feel 2022 was a great year for DeFi. Yes, prices went down significantly, but in terms of the protocols themselves, they performed very well. So they weathered the storm of a massive bear market. We saw the stark differences between DeFi and centralized options, where all these lending options, all these centralized options that were basically going bankrupt, and on the other hand, we saw DeFi working as expected. So over collateralized, none of the DeFi protocols went down, and they just kind of worked as expected. So if anything, I feel that this bear market has accentuated the benefits of DeFi, so decentralization, openness, over collateralization, and in a way, it has shown that real economic value has been created for the first time. So before we had Bitcoin, but the first applications that generate real economic value, like Aave, Compound, or Uniswap, were created recently from the recent DeFi wave. And I feel, yeah, where we are right now is we kind of wash out a lot of the bad actors, also a lot of the bad setups. So companies that were under collateralized, selling, offering services that were loans that had no collateral. All of this has been wiped out. And from an investor perspective, this is of course quite bad. People lost money, and that's terrible. But from the technology perspective, what has left and what has weathered the storm is companies, or are companies that are quite strong and our technologies also that are showing their worth. So I feel that in that regard, DeFi will come back stronger, and volumes overall are down, but we still see economic value creation on these platforms of lending and borrowing, and I think there's going to be more applications that right now we don't have, but that will come and will become quite big. The other part of that, I think, is when we talk about trust, I feel in one way, trust has been a bit damaged because of all these negative events that have happened, collapse of Luna, the collapse of FTX, and so on. But technology, it's still is there. So all these things were either bad actors, or in the case of Luna, just people didn't care to read how it worked, and then bad things happen. But I think trust will be regained. That's some partly on our side of people that are working in crypto companies, building stuff to regain that trust. But at the same time, many other things are showing, hey, this is something that has proven itself to stay and to work in very strong conditions and very difficult conditions. So I think DeFi is looking brighter, and also costs are going down. So we have a lot of competition now. So we will see, and what is the best tech will win.